Let us understand what is money market. See, these concepts are all forms part of the um, your bond market. So let us understand what is money market. Uh, One, see, money market provides a short-term and ultra-short-term lending and borrowing of funds. So money market is basically meant to provide short-term and ultra-short-term lending and borrowing of funds. It may range from overnight to 1 year. Okay. Now, coming to participation in money market. See, participation in money market has two different types. Okay. One, fundraising, and two, asset acquisition. See, participation can happen in two different ways. Okay. It can happen for fundraising also, and it can happen for the asset acquisition also. Now, see, money market is basically used for funding short-term liquidity mismatches. Especially, money market is used by primary markets, PDs. Then it is used by the banks, RBI, and corporates. And we should understand that the entire liquidity condition in the banks for short term and long term is dependent on the money market. So hence money market is very important for a country's financial infrastructure. Now let us understand who are the key players in the money market. See, retailers will not be a key player. Now first one is the government, as I have told you, corporates, banks and NBFCs, insurance companies, pension funds and provident funds, and payment and small finance banks. So these are the major contributors in the money market. So there are various components of the money market. We will understand one by one each one of them. Okay. See, first of all, call money. Call money means any bank can ask money from the money market infrastructure that they want money for the overnight. Okay, the RBI can say, okay, I will give 100 crores to one bank for overnight. That is, overnight means for 12 hours lending. So that is called as call money. Call money is usually overnight lending, but it is an unsecured lending. So no collateral will be taken while giving the money. It is an overnight borrowing and lending instrument. See, it is basically restricted to scheduled commercial banks and primary dealers. I will explain who are primary dealers at a later stage. Mm, okay, because it's a little bit, slightly complex this thing. I will explain it after, at the end of this presentation. See, call money is usually operated. See, most of the concept I'm going to explain, money market instruments which I'm going to explain, is operated on the RBI NDS call platform. That is Reserve Bank of India call platform. And this is managed by the Clearing Corporation of India Limited, CCIL. Here, for call money, the minimum market order is 1 lakh rupees. Next comes something called as notice money. Again, it is an unsecured lending. It is not overnight, it is beyond overnight for up to about 14 days. See, we must understand for 14 days there is going to be an unsecured lending without any collateral. Again, it is restricted only to commercial banks and primary dealers. It is operated on the NDS call platform and this is managed by CCIR. Here also the minimum market order is 1 lakh. Next is term money. Again, it is an unsecured lending. It is for 15 days to 1 year. It is restricted to commercial banks and it is operated on the call platform. And here also the minimum market order is 1 lakh. This is a very important concept, this market repo. Market repo is also referred as forward contracts. It is the sale of security to lenders and agreeing to borrow them at a later rate along with interest. Simple repo rate. What you say, lenders will give you 100 rupees. You will say after 1 month, I will give you 102 rupees. That is called as, in a simple layman term, this is called as market repo. Okay. So then the interest will be included in the repurchase price. That's what I'm saying. If I give you 100 rupees and if you say I will give you 102 rupees afterwards, this is market repo. Simple concept. It is again a non-collateralized lending, but it is also an unsecured lending. However, Reserve Bank of India regulate the repo market very strictly. Here the market participants include commercial banks, NBFCs, financial institutions, pension funds, insurance companies, corporates, etc. Here there is a different platform. Here repo transactions are reported on clearing corporation repo order matching system, that is CROMS they call it. Here the minimum market order is 1 crore. Now something called as a tri-party repo. See, it is the same as the repo rate contract, except that there is an intermediary called as tri-party agent, TPA. The job of the tri-party agent is he will select the collateral. Matlab, see, the concept remains the same. You give 100 rupees to somebody and somebody will give you 102 rupees. But there will be a agent in between. He say to the person who is taking money by you, I want selection of collateral. That is, you will give me, government's bonds if you are holding, you give it to us as security. That is called as selection of collateral. So the tri-party agent will select the collateral and he will settle the payment and he will keep the custody and manage the collateral given by the borrower during the repo period. Clearing Corporation is presently acting as the tri-party agent for any of the transaction of tri-party repo happening. CCAL created Collateral Borrowing and Lending Obligation CBLO on January 2003. So this was converted to TRAP on 5th November 2018. The Tri-Party Repo Dealing System TRAPS is an anonymous trading platform and is provided by CCAL. Even our National Stock Exchange where we do trading is also an anonymous trading platform. We don't know from whom we are buying the stocks and the person who is selling don't know whom he is selling. That is known as anonymous platform. There is nothing technical about it. It's very simple. The wording is a little bit, complex. That's all. All market repo participants, who are the market repo participants are there, they can trade on this TRAP platform. Just the way retail traders can trade on Zerodha, they have another platform specially for this repo market participant. Zerodha, I'm just taking the name. Zerodha, it can be any other brokerages. TREPs are exempted from RBI's cash reserve ratio and statutory liquidity ratio computation. See, whatever money which is being circulated in this TREP system will not form part of the cash reserve ratio and SLR. It means it can lend over and above CRR/SLR limits when lending. I will explain what is cash reserve ratio and what is statutory liquidity ratio in the next future slides. Okay. All these TREPs which is being traded on this platform, that is CBLO platform, has a face value of 5 lakh and multiples thereof. I hope you understood what is tri-party repo. I am giving 100 rupees. Somebody is taking 100 rupees. In between there is one person. I give 100 rupees to that person. And that person speak to the borrower and tell, see, I am giving 100 rupees to you. Please give me collateral. You give me your bike or you give me your bonds which you are holding to me. So he will hold it and give 100 rupees. And he says, you will give me 102 rupees afterwards. So he will give everything to the borrower. Borrower will take it and at the end of the settlement, he will give the 102 rupees and take back his bonds, that 102 rupees, that tri-party agent will give it back to the person who has lent 100 rupees. That's all. Now coming as treasury bills. See, treasury bill is a short-term borrowing by the government of India. Treasury bills have a maturity from 91 days, 182 and 364 days. See, if you go to the RBI, site, you will see that RBI carry out weekly auction of treasury bills. If you subscribe to the RBI, website, they will send, every week you will get mail. What are the different types of auction which are happening? 90 days option, 182 days option, 364 days option. You say it, yes, it is not available for public only due to the fact that you have to first register yourself in the RBI website, and you should become a member of that. Then only you will be able to trade on buying these treasury bills through auction. So these are zero coupon securities, all these treasury bills which are generally issued at a discount. Now let us come to the cash management bills. See, cash management bills are also issued by Government of India, and it is very short-term bills. See, it is usually issued to fund temporary mismatches in the cash flow. It has maturity less than 91 days. It has a face value of 10,000 and multiple thereof. Commercial paper applicable basically to corporates. So it is the short-term unsecured borrowing by the corporate. So if you buy any commercial paper, corporates are not going to give you any security. It is an unsecured. If the corporates tomorrow go bankrupt, you will not get your money back. That's why it is called as unsecured borrowing. Corporates will not give you any security or guarantee that they will return. They say we will give you some interest rate. The interest rate will be generally higher than the government bonds interest rate. If government bond is giving 5% interest rate, your commercial paper may be giving 8% or 10%, or some of the corporates even give 12 to 15% interest rate. Like Shriram Transport, Bajaj Finserv. If you put your FD out there, they will give you 7, 8, 9% also, whereas your SBI rate is 6.5. Okay. They mature within 1 year and are issued with a duration of from 7 days, 14, 91, 182, and 364 days. See, if you have to invest in commercial papers, you should ensure that the corporate entities have a very good credit rating. It is always issued in the multiples of 5 lakh. See, commercial papers are issued by the corporates for working capital requirement. What do you mean by working capital? Working capital means day-to-day expenses happening, purchase of some item, paying of wages. These are all called as working capital. So these commercial papers are issued by the corporates for working capital requirement. Now coming to certificate of deposit. CDs are issued by banks and financial institutions. It has a tenure of 1 to 7 days, issued by a face value of rupees 1 lakh and multiples. Financial institutions generally issue certificates of deposit of tenure greater than 1 year but less than 3 years. Okay, and usually CDs have a maturity of 91 days. Now, corporate bonds repo. Just the way we have got a government, repo, okay, market repo, which we discussed. Just like that, you have got something called as corporate bond repo. It was introduced by the RBI in 2010. It can be traded as an OTC, means over the counter, or on stock exchanges. What are the securities which are eligible for this corporate bond repo? Any listed corporate bonds and debentures can be traded on this corporate bond repo market. Commercial papers and certificates of deposits can be traded, and units of debt exchange traded